Hello and welcome to Let's Talk Business. Markets not only end the week on a positive note, but also scale new heights. Bulls continue to be in the driver's seat. Sensex within kissing distance of 65,000. Nifty, on the other hand, shut shop a few points shy of 19,200. While IT, PSU Bank and auto sectors led the advance, metals were under pressure. Hiral Dadia with a wrap of all the market action. Hiral.
A good start to the July series is what we've seen after a good close to the June series. Sensex and Nifty ended with gains of over 1%, hitting fresh life highs. If you see Nifty, it ended around the 19,200 mark, whereas Sensex saw a jump of nearly 800 points. In terms of the sectors, all the sectors ended in the green, and it was mainly the IT pack which led the gains, and it was the metals that was the top losing sector in today's session. From a broader market perspective, they did end in the positive but underperformed the benchmark indices, and similar was the trend with Bank and Nifty as well. Smart gains coming in there but underperformed vis-a-vis the benchmark indices. Let's quickly look at the top gainers. M&M, a 52-week high after receiving a PLI eligibility certificate. Infosys, IndusInd Bank, Hero Moto as well as Sun Pharma were the other top gainers. Whereas on the losing end, you had Adani Ports, Adani Enterprise, Divi's Labs, Grasim as well as Apollo Hospitals. Let's quickly look at the newsmakers of the day. Bharat Electronics, on the back of an order win, saw some smart moves. HDFC has increased stake in HDFC Ergo. You had Paytm, which is partnered with Shriram Finance on the back of its Shriram Finance was in focus. Kalpataru Projects, on the back of an order win, saw some smart moves. Credit Access Grameen declined in trade, and this was on the back of the block deal. JK Tyre hit a 52-week high, and this is on the back of the capacity expansion plan. Reliance Capital gained after the lenders approved the IndusInd bid. And MCX was the stock of the day as well, which extended a decline, and that's mainly because clearly brokerages are now saying that the contract with 63 Moons has come in at a significant cost with regards to FY24 profitability. Easy Trip Planners, HDFC Asset Management, as well as Bandhan Bank, these were a few of the other names that were the newsmakers of the day as well. So overall, a good day of trade, a lot of newsmakers, and a good start to the July series. And analysts are indicating that 19,500 is the next target that we should be watching out for in terms of Nifty 50. Back to you.
Many thanks, Hiral. Let's now move on to some other stories. Helios Capital's Dinshaw Irani says that financial stocks will lead the market rally in the next 3 to 4 years. In conversation with BQ Prime's Neeraj Shah, he adds that HDFC Bank merger will attract more inflows into the bank stock. Listen in.
Our belief is that financials will really lead the rally from here on. Actually, you've hit the nail on the head, because if you look at the three over heavyweights within the index, the SDFC, ICICI and SBI, they've frankly gone nowhere as such, year to date as such. And it's the others which have driven the rally. But our feel is that the others which have driven the rally are more cyclical than actually structural growths out here. Though financials are also considered cyclical, but our feel is that the next 3-4 years, it's going to be a structural growth which is going to be built in now here. And I think in the case of HDFC Bank per se, I think it was more of a overhang of the merger. And obviously the outlook that with the merger, the stock will be like 13-14% of the weight, and most of the mutual funds will be overweight, or the FIIs will be overweight, and that's why that overhang was created as such. But I don't think that's a big issue here, because FIIs are not driven by the 10% weight. They normally track the index. And in the index MSCI, HDFC Bank was never present. It was only HDFC. So there's an additional buying which will come in as and when HDFC and the bank merge. So that's a big overhang which will take care of it. And one more thing that I would like to highlight in financials is that till now, it was mainly the NIMs which was driving the earnings growth, right? They were increasing their lending spreads much faster than what their borrowing costs were. So obviously that seems to have peaked out, because interest rates have hit a peak. Our belief is that I don't think RBI needs to hike any further interest rates from here on. But the fact is that the earnings growth will come in mainly because of the credit growth, which is now kicking in. In fact, the March quarter, where we expected that NIMs would have peaked and it'll be the credit growth which will kick in, both happened. I mean, the credit growth was way in excess of the high teens, and so was the case with the NIMs. They also expanded to that extent in certain banks as well.
Well, and healthcare and insurance are sectors which have been ignored but have scope for higher growth. That's the word coming in from Julius Baer's Rupen Rajguru. In a conversation with BQ Prime's Neeraj Shah, Rajguru says that the overall breadth of the Indian stock market has shown a rapid improvement. Listen in.
But in India, if Nifty has given 4% return, 30 stocks in Nifty actually has delivered returns which are higher than 4, and the average return of that 30 stocks is 12%. So what does that indicate? The overall breadth of the Indian market is much better, and I think one thing which was ailing probably the fund management industry again in that last decade was it was very difficult to beat Nifty. I personally believe next 3 to 4 years would be the year of alpha managers, and I think we have already seen in first 6 months the returns which the managers have delivered is much higher than the Nifty. So to sum it up, I would say we have to look into opportunities, and opportunities are there across. Some of the ignored sector which we believe there is a scope of re-rating and probably absolute alpha are healthcare is one sector. We also believe insurance is another sector which is there. And now probably amongst the financials, the big 4 banks also are on a relative basis much reasonably valued as compared to what it was some time back.
And Nikita Anand of S&P Global Ratings talks about unsecured loans in the banking sector and the delinquencies in the credit card segment.
Within the unsecured retail space, including credit cards, there will be a lot of difference between various banks because it totally depends on individual banks' lending standards. For example, some of the large banks, including SBI and ICICI, we know for a fact that they typically lend unsecured to their own corporate salary customers, which means they have good visibility on the cash flows. They are regularly seeing salary increments, and that is one of their basis for giving out this loan. They feel comfortable that based on this cash flow, they can give out this loan. The other thing is a large part of this lending happens to salaried borrowers. So as long as employment conditions in India are fairly stable, at least in the formal sector, it means that default rates in these products should not be extremely high. Now, I must point out that typically delinquencies, early delinquencies, as well as what you call a non-performing asset, which is 90 days past due, in credit cards will be higher than some of the other products. These are typically higher risk products generally per se. And I think if I look at all the product segments, credit cards is one segment where we have seen some rise in early delinquencies even over the past few quarters. But still, it remains more or less at manageable levels. What happens in credit cards also is that maybe a customer is, has not paid in 30 days, but once the bank follows up and they kind of, explain to the customer, they end up paying after some period of time. So there may be a bit of lag, and it may show up as an early delinquency, but it does not automatically mean that this customer is going to default. This is quite a common practice in credit cards.
Let's now get to the latest update in the TCS Bribe-For-Jobs scandal. Following investigations into the whistleblower complaints of an alleged hiring scam at TCS, the company has banned 6 employees and 6 subcontractors. My colleague Tushar is here with the details. Tushar?
TCS has broken its silence on an alleged hiring scam within its ranks that purportedly ran into crores. India's largest private employer has banned 6 employees and 6 business associates or staffing firms after investigating 2 whistleblower allegations into the hiring scam that first came to light a week ago. The complaints received in late February to early March pointed to certain favoritism being done and favors being received in recruitment of business associates. The complaints were investigated and 6 employees were found in violation of the Tata Code of Conduct, TCS chairman N. Chandrasekaran said at the company's virtual AGM on Thursday. He said, and we quote, "While we cannot quantify what favors they got, they were certainly behaving in a way that they were favoring business associate firms." TCS is now taking a relook at the supplier management process. What merits a mention here is TCS's hiring process. The company has 2 departments that do hiring for the company: HR and talent acquisition, which hires people on the payroll; resource allocation group, which deploys available resources into projects. Whenever there's a talent or skill shortage, TCS has a set of business associate firms, about 1,000 across its global operations in 55 countries, to get contractual employees. They make up a small percentage of TCS's deployment for a particular project. The two whistleblower complaints related to certain individuals in the company who were working with certain business associate firms to recruit contractual workers in their favor. What happens next? We don't know. Here's what the TCS chairman had to say at the virtual AGM.
We received 2 whistleblower complaints towards end February and March. And both the whistleblower complaints were investigated. The complaints were about certain favoritism being done and favors being received in recruitment of BAs. So the company has 2 departments. One is the HR and talent acquisition, which hires people. The second one is the resource allocation group, which is about deployment of the available resources into projects. And whenever there is a talent shortage or a particular skill that is not available at that point in time in the location where we need them, the company has a set of BA, we call them business associate firms, the firms to get contract employees. At any point in time in the overall deployment of resources, about 2 to 3% are such BA associates or contractors. And this complaint was related to certain individuals in the company working with certain BA firms to be recruiting in their favor. 2 things I want to say. There are a large number of BA firms who do business with TCS. There is a rigorous process in the company to recruit a firm or qualify a firm or empanel a firm to be called as a BA firm. And there are about little over 1,000 such firms across the globe because we need resources in 55 different countries. And each one of them do certain amount of business depending upon the skill availability. And in this case, we found 2 whistleblower complaints, one related to India, one related to the US. The investigation in India is done by a senior officer in the company. And in the US market, we had an external firm to be able to do that. And we found 6 employees who did not follow the ethical conduct. And while we cannot quantify what favors they got, but they certainly behaved in a way that they were favoring certain firms. So we have banned all those 6 employees and also the 6 companies. 6 such BA companies. There are investigation pending on 3 more employees. That's all I want to say with respect to that. But the company will look at the whole BA supplier management process and see what the weaknesses are and will completely tighten the process to ensure that we do not have such incidents. So that's a job that we have to do at this point.
Well, and the country's largest dairy manufacturer is eyeing to enter the FMCG market by investing around 5,000 crore rupees in the next 2 years. Amul's MD Jayen Mehta, in a conversation with BQ Prime Sesa Sen, has said that he's confident in achieving double-digit growth for the fiscal.
In the next 2 to 3 years, and for the projects which I just mentioned, we'll be spending close to 4,000 to 5,000 crore rupees. Both expansion in capacities of existing plants, different products in the existing plants, and also the new greenfield projects that I mentioned. In ice cream and other products, for instance, we will be investing close to 1,000 crore rupees, and part of that investment is under the PLIS. So a lot of support and encouragement for the dairy industry, for the organized food sector, and this is actually a very great tailwind for the sector. I think it's very much possible. In our first quarter, growth also has been double digit, despite the summer not being as it was expected, and which did affect a little bit the beverages, the ice creams, the buttermilk curd kind of a business. But on the whole, we see that the trends are very, very positive for the sector. The growth in milk production is happening and the growth in milk consumption is happening. So we are confident to achieve a double-digit growth and hit our targets of about 66,000 crores, which we have taken for ourselves, for GCM as such. And overall, we'll be seeing definitely 80,000 crores.
With that, we're taking a very quick break. News and updates will continue. Stay with us.